Hello everyone and welcome to today's morning report on Tuesday the 8th of November with me, Rich Market Analyst at Hantec Markets. We've got a fairly cautious open to the European trading. Basically FTSE DAX are both flat on the day. DAX CAC is slightly higher. There has been a caution that comes on the final day of trading just prior to the result of this presidential election. The US goes to the polls today, and what we have seen is yesterday a big turnaround in sentiment for the dollar. Big turnaround, and that came as the FBI sort of said that it wouldn't be pursuing these email charges against Hillary Clinton or any sort of wrongdoing. And the dollar improved on the back of the fact that that improves Hillary Clinton's prospects of winning today. It seems as the polls are opening, the latest opinion polls suggest that Hillary is about sort of 4 points up and is likely to win, and the markets are sort of fairly settled on that. You had a big improvement in risk appetite, big corrective move on the VIX volatility yesterday as market fear, in inverted commas, started to fall away. You had treasury yields which started to push higher again on the 10-year and also the 2-year, and also factors such as gold breaking lower. And also, interestingly enough, after a huge sell-off, we've seen the oil price starting to rally again. So this is all sort of turning around, interestingly enough, with the election. And I think you can see the fact that these sort of turnarounds will likely continue on a Clinton victory, which is still the most likely outcome. In terms of anything else really going on today, not a great deal really. We had the China trade data coming out overnight. So let me just scroll back to the top here. China trade data, whereby both the exports and the imports missed expectations there. Minus 7.3 on the exports, minus 1.4 on the imports, both worse than expected. That sort of hit a little bit on the riskier end of things, with the Aussie and the Kiwi mildly lower on the back of that, but nothing too significant. In terms of what we've got to look forward to today, we've got the UK industrial production at 9:30, and also the JOLTS jobs openings. So UK industrial production expected to come out at 0.8% for the year, and that is again sort of where we were last month. And JOLTS as well has been very strong, expected to improve mildly to 5.51 million. And I don't really think the markets are going to be paying too much attention, if anything, really, to these numbers. Far more focused on what the presidential election outcome is likely to be. So that takes me to my chart of the day, which is the sterling yen. And we've had this sterling yen, which, as you can see here, break through this big support, close below this big support of 130 back in October, and that old support becomes new resistance, whereby all these traders who bought in here looking to go long are now sitting on long positions, and have seen this unwinding move back to 130, and they have now got a decision to make. Do they sort of close out their positions, or do they now go long again with the market sort of rallying? So 130 is a big area of overhead supply, and that is a key resistance level now for the sterling yen, basically being tested now. We had an initial move above 130 yesterday that was just failed into the close, but you look at these momentum indicators, more positive. But the RSI again back around the mid 50s, which is often throughout this year been where sort of between 50 and 55 really. A couple of times has moved above 60, but generally speaking has been failing in the sort of 50 to 55 area. It's still pushing higher, so that's going with this little run higher at the moment, and if it can sort of break this consolidation that we've seen in the last sort of 24 hours around this sort of 130 area and sort of close back above 130, then you'd be seeing a move to the upside. 130.20 is the initial resistance from yesterday's high, and if you continue that move to the upside, then I think there's no real reason why you can't sort of come back towards this little downtrend we've got in place here, currently around 132, pretty much bang on, and that 132 level coincides with all this resistance here from sort of late September, early October. So it is a key sort of level that would need to then get through. So if you get through that, then you're up and away really in the recovery, perhaps back towards the 138 area. So this would be a really important time, I think, for sterling yen, and the improvement in risk from a Clinton victory would presumably help to drive that move, so watch out for that. But with that in mind, I wish you good luck in your trading today. There's a nice little near-term band of support between sort of 128, which is a bit of a pivot level, and also 129. Again, a bit of a pivot level. So nice band of 100 ticks worth of support. But I wish you good luck in your trading, and I will speak to you later. Thank you.